Hello and welcome to Macro Mondays, where we take a look at the higher term timeframes and weave that into our daily analysis. Welcome to Landy's Crypto Corner. Today is May 1st, 2023. We're going to jump right into this and look at the monthly, as we just had a monthly closure and a weekly closure at the same time. And here we have the index. We can see that we had a doji candle last month here. And this, is kind of not really anywhere super important in terms of support and resistance. We are on some major daily and some weekly resistances up here, but it's either going to go up and hit overhead resistance or come down and hit some support down below, and that's what we're going to evaluate here today. Now, the main overhead resistance realistically is kind of far away on the monthly. It's around the $35,000 area. And the first primary support down below price action right now is down near that 23.3, 23.5 area, depending on the chart that you're using. So knowing this, we can kind of look here and see, based on the monthly, we're in the middle of that support and resistance. And in fact, if you were to pull a fib, not because it's relevant to price action, but more that it's relevant to the range between the support and the resistance here, Bitcoin came up to about 50% of that range in between the two on the monthly. So having painted a doji in this last candle on the monthly, that does give us some clues into some future price action, and that is drop the low. We're likely to test the downside support and drop the high, hit the high up here, which would be above the 618. Then we're likely, more likely than not, I should say, to come up and at least test the big breakdown candle from June of last year. So that big breakdown candle, by the way, is coming in at around 31,800, which is one of our primary daily levels. So if you've watched the short videos, you'll note that I call out 31.8 to 32.4 as the big overhead resistance, because it's a monthly level, it's a weekly level, and it's a daily level as well. So that area likely to get tested. If we're trading above, of course, that very likely to get tested if we trade back above 31,050 bucks or so. And trading below the low here at the 27,665, I believe. Let me just check. No, I'm sorry. That's it's $27,000 basically. Just about 28 bucks under there at 26,972. So call it $27,000. Start trading back below there, and in this case, from the monthly perspective, closing below there, then it is likely that we go and we test the downside support. Wicks first in order. We've got the high wick here at that 25,262, and you'll see that when I throw on support and resistance, where that falls on the daily levels, we have the wick just below there at 25,200. And then we've got the 24,700 area on the lower wick there, and then getting down a little bit further, $24,000. So, and that's getting very close to the monthly support there at around that 23.3 to 23.5 area. And I do want you to make note of those particular price points, because they're going to be something that comes up again and again and again. Now, when looking at monthly momentum, we see that momentum on a regular Stoch, not a Stoch RSI. Stoch RSI has actually been, I believe, up out of the oversold region for a while. And we just now have seen in this past monthly closure, in this current monthly open, that Stoch is now working its way out of the oversold region. Now, that doesn't mean that price can't move down to some of the support levels that I just spoke about. Ultimately, if Bitcoin were to break down from the support level at 23.3 or so, we're likely to see it run to find support down by that area that we talked about last Monday, and that would be 20,500 or so, possibly even lower down to run the wick lows at that 19.5 area and under. Any closures down there, as I said in last week's video, and we are going to see Bitcoin run that low area again, somewhere in there, possibly even past it. But, I do think that that's highly unlikely as things stand right now. We're very, very far away from that. We're very far away from even the support at 23, 23.5 currently. So, a lot can play out in a very short amount of time. And we do have the FOMC meeting this week. So I do expect further volatility in Bitcoin's lower term timeframes before that starts to affect the daily. So from the monthly perspective, just make note of around that 23.3 to 23.5 area, and then the 20,500 area. Basically, Bitcoin's pretty safe above $20,000 in my opinion on a monthly basis. Any closes below there, of course, then we're looking at targeting this major low again. But anything above there that does create a low, in this case, we get something that looks like this. Well, that then means that this would become a major low, and that would confirm this as a macro low. So that is going to be the monthly perspective as we just had that close, and we can peek at the actual monthly momentum pivot here as well, and that's at 16,100. So it's looking very, very healthy, and I have no issues with price pulling back. As many of you that have known me for quite a long time, you can accumulate as much as you want on the lows, and it never feels like enough. So go ahead and return trip that thing for a higher low, and I'll be very happy. And we get to trade it on the way down if that is the direction that is chosen over the course of this week and into next. Now, when looking at the weekly with those levels noted, you'll see that we put in a high on the weekly here and then bounced back up. And we closed a little bit more than halfway up this engulfing candle on the weekly here. So, this right now from last week's candle and then testing down early in this week, not abnormal by any stretch of the imagination. Now, there is hidden bearish divergence on this particular high from the $48,000 region. And I don't put a lot of weight on that. Now, if we do see this start to break down below last week's low at that, around $27,000, it has one final area that it can swing in this range, and that is going to be the wick low here at 26,530 or so. And that's going to be important because that might actually happen, judging by the way that the daily is going today. And that's, I don't have too many concerns. This is an uptrend, and really anything above this last, higher low here, where the open was at 22,250, I don't really see any issue. And even on a lower low and a close, as long as it remains in and above this monthly support, that's going to create regular in-trend bullish divergence. So that would, at minimum, begin targeting, if it got down below these lows at around that 21.5 or so and started targeting down to that 20,500, then at least, bounce targets would be up into the local range highs in the $23,000 to $24,000 area. And even better is getting above there and then retesting this area and these highs. And that's a beautiful, beautiful trade. So the other big thing to note here is pulling a fib from high to low. You'll see that the 50% fib is right on our monthly support. So we can flip back to the monthly here. It's something that I regrettably forgot to call out when I was on this screen. But, from this run up from wick high to wick low, any retracement that stays above that 50% is a very strong indication that that we're going to see higher prices, in the coming months. So if we do see a retracement that heads down here to around that 23.5 area, 23,200 area, and then bounces from there, we're more than likely going to see significantly higher prices in due time. So, obviously creating a major low, solidifying this as a macro low, it's more than likely going to signal that the next big bull run is on. And that's, something that we'll probably have to wait for quite a while here, judging by the weekly and the daily. So let's go back to the weekly here. When looking at the weekly momentum chart, our Stoke here, by the way, this is running a 6-3. You could just, throw the regular Stoke on from that TradingView provides, and just set the K read to a 6 and D read to 3, and you'll get this exact look on your chart as well. But we see that we do have a momentum shift. Obviously, putting in a high will do that. Not always. Sometimes when we have lift off for Stoke, but we're in a critical region. So this is critically oversold. Does that really mean much? Well, in this case, we see that a high is put in. We see that Stoke is flipped, and we see that we're looking at mean reversion play here on the BBWP. This is a volatility metric for the Bollinger Bands, but you can just use it as a general volatility metric. It is not direction based, so it is direction neutral. In this case, we're coming off of an uptrend, and then volatility is cooling down, indicating that we are going to see a slowing in that uptrend and possible mean reversion. And in this case, that mean reversion is really only going to start playing out once we break the range, and or it's going to consolidate for a while the volatility cools down further. And I'll show you that in just a moment with the Bollinger Bands. Now, in this case, nothing too concerning. We could very easily see another scenario where we play out the way that we did earlier this year in the first quarter. And then we see a giant wick down to hit some of those major support levels. And even on the weekly here, that we can see 24,288 is the weekly support. And this is untested as it stands right now. And it's coming in right around the 618 of the fib retracement as well. So it's not directly on the close open, but it is catching the wick highs there at the 618 from the high to low pull. And coming down there and throwing a wick at the support and getting a close above that $25,000 level at the 618 would be a very good sign that things are going to go back and retest this range if it did get there. Now, what I would like to do is mark this out, because this 24,288 is important as well. We'll just change the color here. And let's see. We'll go with yellow for now. So big area on the weekly. And in terms of the weekly wick low, that's coming in at that 26,500 area, 26,530 or so. So we kind of have a zone of support here to watch between that 26,500 and $27,000. If Bitcoin starts closing any of these timeframes below there, if it closes the monthly below there, we're looking lower down to the support area where we have that 24,300 to around that 23,300. So about $1,000 zone of support. And of course, this weekly extends over. This was a big breakout area, and it has not been retested. So seeing this come down to do a retest is actually something that I've been waiting for, and I hope happens. Quite honestly, I think that it would be a healthy correction. And as it stands right now, we're just ranging. So we'll see if we can get a bias on that. Now, if we definitely if we close a down week this week, it's more likely that we're going to start heading that way in terms of price action. So when looking at the monthly and looking at the weekly, let's go ahead, having looked at those rather, let's go ahead and take a look at the daily now. Now the daily doesn't look too bad, when you take into context all of this. Now, it is not a good look on the daily for the current trend. This is a trend reversal setup. We have a lower high. We break below the low, then we are forming a new trend. In that case, this would be, this would be your lower high, and then you're looking for lower lows, and then lower highs, and so on and so forth, and then on down. Now, that is something that, is beginning to play out, but until we actually break that low, not much is happening. It's just ranging activity. Now, to put on I'm going to put on rather the local support and resistance with some of the monthly levels here. So we see the weekly support and resistance level down below these dailies. The yellow is the dailies. We have the wick high in teal and the wick low in teal of our current range. And then we've got, basically the middle of the range right here. So the weekly support level, the monthly support levels that I called out earlier are marked on this chart. So when looking at the monthly, when we throw on the Bollinger Bands here, we can see that we have the basis band of the Bollinger Bands has now moved down very close to the high here. So I would be aware of any kind of moves back to the local high here. It is basically right around our daily resistance anyway, that there is the monthly basis band, which is the 20 simple. That is the 20 simple moving average in this case. So be aware of that. And then down below price action here, we don't have too much outside of this lower first standard deviation, which has moved all the way down to $18,500. And quite honestly, during transitional phases in any asset, what you'll typically see is after, a prolonged downtrend, bounce that reclaims the lower first typically will come up in and around the basis band and then come back down somewhere around that lower first zone, typically on a major support, and try to higher low its way out. Typically what you'll see is they fail at the basis band if it's going to be bearish. If they don't, after they put in the higher low, they take off to the upside and target the upper first standard deviation. And that's sitting at $44,000 right now. So just below the monthly close open highs here at the 45,500 area. So things are lining up pretty well with support and resistance and the Bollinger Bands. And just so you guys know, Bollinger Bands, you can derive targets from them, and they often will line up with your support and resistance. That's where the confluence is the strongest, but they're primarily a metric of volatility. So we've got trend, we have support and resistance, we have momentum. We see that momentum to the downside just by looking at the candlesticks has slowed down. We can use indicators like the Stoke. And then you need that piece, that extra piece, which is volatility. That's what will take your trading game to the next level. Now, when we look at where support and resistance is with the Bollinger Bands on the weekly, we can see that the upper first standard deviation is right here in this area where we had the daily breakout at 28,600, and then this support from the daily wick lows, that low from that daily redistribution on the way down to the major low that we just are coming off of. Now, losing the upper first standard deviation on a weekly close, you typically target in and around the basis band. Well, the basis band just happens to be aligning with the weekly support right here. So we have the untested weekly support and the basis band kind of coming right in line with each other. Now, I don't unless, we get a massive dump off, during this week's candle, I'm expecting volatility, not necessarily looking for a massive rundown, but we could see one. And if we did, this is the area that I would be targeting, somewhere in and around the 24,300 to the top side there at around the 25,200 to 25,500 area. Now, quite frankly, a retest and a swing of the lows on the daily is more realistic to be looking at from a support and resistance and a lower term time frame momentum perspective. And that's also another possibility, but in the event that we do see a breakdown from this structure on the weekly, a close below that upper first standard deviation does, from a technical analysis point of view, when using Bollinger Bands and volatility in this manner, that would be targeting the basis band, which just happens to be a major area of support that has been left untested on this particular move to the upside. So be aware of that. Let's go ahead and take a look at the daily, and we'll do a quick daily analysis. We can see that based on those 60-second videos, if you are watching them, they're the 60-second Bitcoin in 60 seconds or Bitcoin targets for whatever day. I do them daily. I do suggest you watch them. They are based on my full analysis that I do, not just in this video, but I'm going to be doing more regular intro week analysis, probably about 5 to 10 minutes, not quite as long as the Macro Mondays videos, but this is bouncing off the areas that I've been talking about for a while. So as long as Bitcoin is above the the lower first standard deviation, which is a major support area at $28,000, if it loses that, I'd be looking down to the lower second standard deviation, which is $27,000. So right now that's the low here. So if we lose the wick low and that lower second standard deviation, then we open up targets down to this 26,500 support, or wick low, I should say. And if that area is lost, we start targeting down to the lower third, which is coming in at, now it's adjusted down to 25,900 or so, and then eventually start targeting down to the 25,200, 300 area to 24,800, and then possibly that weekly support down at 24,300. And then back above the basis band. Now, quite frankly, this breakout area on the daily is 28.6 as the daily breakout level. And a lot of that is derived from this consolidation over here. If you didn't watch last week's Macro Monday video, that's okay. But this consolidation daily redistribution pattern from late or May, I should say. Yeah, it was a year ago now. May of 22, we had the low wick of the range and the close open structure at 28,000 to 28,600, and then the high structure at 31.8 to 32.4. So that's the areas on the daily that we reclaimed, and then we've been bouncing around in, and well, quite frankly, just lost pretty in pretty swift fashion today. So this is going to be what I'm watching. So losing this area on a close, we start targeting the lows of our range, right? And then regaining 28,600, then we can look for a retest at the basis band here, which is coming in at around $29,000. Back above there, I'd be looking to run the local highs at around that $30,000, where the upper first standard deviation is coming in at around 30,000 to 30,100. Anywhere above there, I do think things run the highs again at around 30,500 to the wick high at $31,000, where this upper second standard deviation is starting to line up. And I don't think it would happen before consolidation, but if it did get above the upper second standard deviation, then we can start targeting that big area at 31.8 to 32.4, and that 31.8 being a monthly, weekly, and a daily level. So That's pretty much all I got for you today. The daily, it's not quite turned on momentum yet. This will be an initial cross down if it closes below 28 200 or so, and that would start to make things look a little bit more downside angled. I will say that pushing the lower third standard deviation on the 4 hour here with BBWP pretty well over the moving average here at 84 over 67 does imply that if things mean revert back up, they're probably going to mean revert back up to around where the basis band is, to around where the upper first standard deviation is. And in this case, the basis band on the 4 hour is coming in at $29,000. That is the daily basis band as well. So that's also, the overhead resistance. So it's lining up with resistance as well. And that's going to be the big area to watch. If it does make it above there, the next big area would be the upper first standard deviation on the 4 hour. And that's where we're, looking back into the mid $29,000 area at 29,500 and possibly maybe a retest further up of the local highs. So that's what I'd be watching for on the daily as it relates to the weekly and monthly. I hope you found this informative. And if you do have any questions, go ahead and post them in the comment section down below. Throw me a like and share the video with people you think may find this helpful. I hope you have a good morning, afternoon, and evening, no matter where you're in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out.